Hi, this is Rahul Sharma here from JM Financial. Welcome to the volume 4 of Horizon Video Zine. We present you the market outlook for the month of August. July was quite a happening month as Nifty almost tested the 20,000 mark. It was stocks like Reliance, select IT stocks and metals which did fairly well in this month. Not to forget the pharma which led the rally right from the front foot. The month of August brings us to a Goldilocks situation. We have the US markets poised in such a great shape technically that there is a very good probability that Dow Jones goes on to hit a new lifetime high. As you can see in the chart, a multi-week consolidation has been taken out for Dow Jones. What this means is around 7% upside is what one can expect in the US index in the coming weeks. Now if that happens, clearly equity should be playing a positive role. Now, not only the Dow Jones but even the European indices are poised very well. A simple Euro Stock 50 index, which is a representative of the European indices, has also broken out from its multi-week consolidation. And this top has been taken out after a lot of struggle, a lot of fight between the bulls and bears. This translates into more upside for the European indices as well. Now, if you recollect, there was a time in the market where India underperformed the US and European markets. Post-April, we've seen India or Indian equities do extremely well and actually outperform the US markets. I think now we are getting into a period where not only US and European markets do well, but also the emerging markets, kitty, especially India, continue with the upward momentum. So, which are the areas of the market which can do well? Now, I think one decoding that we have to do is the market positioning. So, as you can see in this graph, this is the open interest or the open positions in the index futures. So, there was a time where FIs were heavily long on the market, retail continued to be short. For most part of July, we've seen that, and Nifty continued to do well. Now, at the beginning of August series, we've seen that FIs have significantly reduced their long exposure. In fact, their long-short ratio to the date has come down to around 54% from an average of around 70% for most part of July. In terms of contracts, they've had around 80,000 contracts on an average on the long side. That has now come down to around 13,000 odd contracts. Whereas retail, which was primarily short and now has gone long into the index futures. So this could be a tipping point where we may see a bit of cooling off happening in the broader markets. But the technical setup of the Nifty is suggesting that the bull run is not done yet. As you can see in the Nifty chart, these are the key levels, the Fibonacci retracement levels where one can look to be a buyer at key supports. So case 1, the correction happens and we get to buy at these levels. It does two things. One is it strengthens the technical structure of the market, and secondly makes way for new money to come into the market. Case 2, the correction does not happen. We may just be range bound for a while. In that case, I think stock specific action should take the lead. So the levels to watch out on the Nifty are 19,300, 19,160 and 19,000 on the downside. If these levels do come, these would be good opportunities to go on the long side, because the undertone of the market is still pretty bullish. Not only is the Nifty 50 is in a bullish space, but the broader index like Nifty 500 is also poised very strongly. Coming to the Nifty 500 index. Now in the last month's edition, we had highlighted that this is a breakout of the year, which is the Nifty 500 index. Nifty 500 is a much broader index as compared to Nifty 50, and the breakouts or breakdowns, whichever they may be, are very much reliable in that. So this is suggesting that the breakout has seen a follow-up buying and we may very well continue this upside, albeit with a bit of corrections here and there, but the major trend of the Nifty 500 index seems pretty solid and northwards. Bank Nifty, which has been leading since a long time now, has taken a back seat. So Bank Nifty could very well see a bit of tussle between the bulls and the bears before finally it takes into another trajectory. So Bank Nifty could be a candidate in case the breakdown has to happen, in case the Nifty has to pull back. It could be a favorite amongst the short candidates. So fingers crossed on the banking index as of now. Well, there are some setups, especially in the Nifty 50 space, which are at major breakout levels. I'm talking of a stock which has been under consolidation for 21 months. Grasim. This stock has seen like a 4x rally from COVID lows of from around 400 odd to almost 1600. Post which we've seen a volatile consolidation happen over the last 21 odd months. Now what this brings us is a breakout which has been confirmed on the monthly charts with the closure of the July series. Now this breakout could very well take the stock out towards 2000, 2200 and even 2500 over the next 12 months. So if you are an investor, this could be a bright spot in the Nifty 50 space where one can generate an alpha. Also, cement has been lackluster over the last few weeks. And technically speaking, this consolidation is almost about to get over. So Grasim remains a very strong setup on the Nifty 50 space. Then, as we have been mentioning in our previous outlook as well, that metals are one cyclical index which is done with its correction and now seems to be ready for a bounce back or for a sustained rally. So Hindalco is one stock from the metal space which is at a multi-month breakout. What this could mean is around 20% upside possible in Hindalco over the next few weeks, and one can continue to be a long investor as well as from a trading perspective as well. The metals are playing from the front foot. Coming to the sector leader, which is Tata Steel. So Tata Steel is another stock which looks very good at these levels and could very well be headed towards our targets of 140, 150 on the upside. So again, metals, cyclical play, high beta, both of the stocks, Hindalco and Tata Steel, are our favorites from this basket. Now what else from the banking pack looks pretty hot, and is there a cautionary indication? Can we take some money off the table? Well, one bank from the private banking space is at a situation where one should take the money off the table. We've seen fantastic numbers in the quarterly update that we had from the bank, and speaking of ICICI Bank, most of the positives seem to be factored in, but technically what is happening is, as the stock has made the recent 3 tops, the first top was made somewhere in January, post which we had another top coming around May, and now we're seeing a top around the 1000 mark on the back of strong results. Well, this is one stock where you can look to book profits and maybe wait for a correction or dip for re-entering. So this is one stock where we are advising our clients to take some money off the table. Well, capital goods have in the last 18 to 24 months have had their time of their life. Larsen & Toubro is one stock which has done phenomenally well over this period. Well, now it has gone into a blue sky territory, which means just go long and ride with the trend. So because this is uncharted territory, putting a number would not be technically be possible, but the direction looks pretty solid, and it is nowhere near as heated up as it was in the previous rally of 2006-07. So we feel this is again a rally of a decadal kind, where we could see even 20% upside from these levels over the next 6 to 8 months in L&T. So L&T should be on your top buying list in case there is a correction, and this stock could continue to do well on the upside. Well, PSE is one sector which remains very close to my heart, especially in 2023. Way back in January, we had highlighted of a decadal breakout in the PSE index, public sector enterprises. Now these stocks have literally begun their bull run in the last few months, and this has been a decadal breakout, which means the next 2 or 3 years could be a sizable bull run in the same. Coming from that sector is one stock from the oil and gas space which is poised well to deliver the returns from here. I'm speaking of ONGC. After phenomenal performance in the other names like NTPC, from the public sector enterprises, we feel it's the turn of ONGC now. Technically speaking, there is a cup and handle pattern that has been formed on the long-term charts, which takes us to anywhere around 20 to 25% upside over the next 6 months. So from an investment perspective, ONGC could be your top pick from the PSE basket. Now coming to a defensive play. Now what if markets take a bit of a breather? What if markets take a backseat and we see a bit of correction? Well, the defensives can play really well. So Marico is one stock which we like particularly from this space, which can spring an upside. In fact, a breakout has been confirmed at the time of recording of this video, which means we could very well be heading towards a new lifetime high for the same, and possibly around 700 on the upside. So around 20% upside is what we can see on the monthly charts of Marico, and one can look to be an investor in the same as well. So these are some of the stocks which look good going into the August series. We feel that after a bit of a breather, time correction / a bit of correction, we could very well see the second round of rally happening into the Nifty, which could take us very well beyond the 20,000 mark and on track to hit our target of 21,000 on the upside somewhere by November, December. We hope you had a profitable earnings season in July, and August turns out to be just as profitable as well. Thanks for listening to the Horizon Video Zine. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.